This is a trade that I took on April 14. If you look at the chart, the market has been going on downtrend for a while. And so I was naturally looking for an opportunity to go for a long position. So the thing that caught my eye was this rather bullish looking candle. I believe it is also called Marubozu, something like that. I'm really poor with names. Essentially it's a nice looking bullish bar. You have a shaven head up there indicating the bullishness of the move. Plus it is also a gap candle. So gap plus Marubozu like candle, those are the things that will interest me. But I only went for long after waiting for the completion of the next candle, where I was actually looking for a close above the Marubozu candle. Now, why is that? Why didn't I go directly into the market after the completion of this Marubozu bar? Well, the reason is because of the size. I was actually looking for a more authoritative kind of a candle, maybe something like this, for instance, where if you look at the size of this fictional candle, it's a lot bigger than those candles that are before it. So this is the kind of a clue that I look for, that tells me that the market is ready to go. There is strength in the move behind it. So when I see a candle that kind of like that shows a little bit of interest but not convincing enough, I usually wait for a subsequent close above the candle setup that I'm looking at right now. So in this case, the inverted hammer candle has a close above the Marubozu, and once I saw that, I went long. And so let's look at how it pans out on the next slide. All right, here we have a slight wolf, and let me just draw your attention to this red bearish candle here. Now, this is actually a candle that was formed on the last candle of the session. This is a 6 p.m. candle. Now, if you remember from the previous module, I don't normally act on candles that are formed on the last session. That means, if the morning session, I will ignore the one that is formed at 12:30. And similarly for the afternoon session, those that are formed at 6 p.m. like this, I will ignore. And the reason is because, from the time the market close until when it opens on the next day, as in this case, there's a lot of things that can go on. The overseas market might react differently, and when the market opens on the next day, then all this information, all this going on in the overseas market will be factored in, and the market participants will react based on the news. So I normally wait for the first candle of the session to take place before I react further. So in this case, I ignore the 6 p.m. candle. When I fire up my laptop next day, and I see this bullish candle here, and I knew that we were still in business and we can still continue to ride the trend. Now, as I said before, the trading is sometimes discretion. There's a lot of discretion in trades, and in this particular case, I was actually also having an eye on the 2700 level right over here. This is because there is a weekly support and resistance level at the 2700 level. In fact, why don't we look at the next slide to see, to have a better understanding of what I'm talking about. Now, this is a weekly chart, and if you look carefully, there is actually a potential key level at the 2700 level here. You know, you got 1 point here, 1 point there. And so that was the reason why I was kind of keeping an eye at this level when I was in this trade. I was looking for any signs of reversal. And when it happened right over here, you have a doji here, and then the market pulls back a bit. And once I see a close below the EMA 10 line right over here, I exited my position. I didn't wait for the market to close inside the GMMA. Now, why did I do that? Now, why didn't I wait for the market to go all the way to close at the GMMA before I bail out, like in the previous trade? Okay, the reason is, again, this is discretion. If you look at the point when I took my exit, notice the GMMA line here, the group of averages here, is kind of squeezed a bit, you know, in fact, almost becoming like a single line. This tells me that the trend that we are hoping for, the developing uptrend, it is still weak. It is still in its infancy. And when it is in this condition, the market is most vulnerable to sideways and whipsaws and things like that. Whereas if I have the GMMA having clear separation between each of the respective MAs, like you see over here, then I would be more inclined to hold on and will only take exit if I see a candle that closes within these MAs. But that is not the case here, and it is still weak. The trend is in its infancy. When the market reverses because of hitting the weekly support and resistance level, I bail out. You know, as I said earlier, the 10 MA line here, this acts as an alert. You know, when price close below or above, if you are in a downtrend, if it close inside the MA, that is you can think of it like a yellow light in traffic lights. So it's an alert for you to see whether you need to take action or not. In most cases, I don't take any action if the MA separation is wide enough, as in this case. But in our case here, where the MAs are squeezed in this manner, I bail out. You know, and I for a couple of bucks, not much profit there. So that was it. You know, I exit on the 17th. I'll see you in the next video.